Scene script. Have you ever wondered how much money you need to live off dividends? Well, it's an intriguing question, isn't it? And that's exactly what we're going to delve into today. First, let's kick things off by understanding what dividends are. Picture this. You're part owner of a profitable company. Now, as an owner, you deserve a share in those profits, right? That's precisely what dividends are. A portion of the company's earnings distributed to its shareholders. It's like getting a slice of the cake without having to bake it. Now, imagine if you could live off these slices of cake, or rather dividends. That's the concept of living off dividends. It's about investing in dividend-paying stocks, reaping the profits and using those dividends to fund your lifestyle. Sounds like a dream, doesn't it? But here's the catch. The size of your slice or the amount of dividends you receive depends on a few factors. First, there's the size of your investment. The more shares you own, the larger your slice. Then there's the company's performance and its dividend policy. Not all companies distribute dividends, and those that do, don't always distribute the same amount. Now let's talk about the elephant in the room, the amount of money you need to live off dividends. This isn't a one-size-fits-all figure. It's influenced by your lifestyle, your expenses, and your risk tolerance. For instance, if you live a lavish lifestyle, you'll need a larger dividend income compared to someone with a modest lifestyle. Similarly, if you have high expenses or a low risk tolerance, you'll need a larger safety net, which means a larger investment. So, while living off dividends might seem like a walk in the park, it's more like a hike up a mountain. It requires planning, understanding, and a bit of risk-taking. But don't worry, we're here to guide you on this journey. Understanding these factors will help you determine the amount of money you need to live off dividends. So, are you ready to embark on this exciting expedition? Let's dive deeper. So, how do you start investing in dividend-paying stocks? Well, the first step is research. It's not about just picking any stock that pays a dividend, it's about picking the right dividend-paying stocks. You want companies that are financially stable, with a history of paying consistent dividends. Companies that have a track record of increasing their dividends over time are particularly attractive. To find these gems, you'll need to dig into the financials. Look at their balance sheet, income statement, and cash flow statement. Check their dividend yield, which is the annual dividend payment divided by the stock's price. But don't be lured by very high yields, as they may be a sign of a struggling company. After you've done your homework and identified the companies you want to invest in, the next step is buying the stocks. You'll need a brokerage account for this. There are plenty of online platforms that make the process fairly straightforward. Simply search for the stock you want, specify the number of shares you wish to purchase, and hit the buy button. But here's an essential piece of advice. Don't put all your eggs in one basket. Diversification is key in investing. It's wise to spread your investments across different sectors and companies. This way, if a company or sector doesn't perform well, your entire portfolio won't take a hit. And finally, remember that investing in dividend-paying stocks isn't a get-rich-quick scheme. It's a long-term strategy. The real magic happens with compounding dividends over time. That's when you reinvest your dividends to buy more shares, which in turn generate more dividends, creating a snowball effect. It's also important to note that investing in stocks comes with risks. The value of your investment can go up or down, and the dividends are not guaranteed. Therefore, it's crucial to have a well-thought-out investment strategy and stick to it, even during market downturns. Remember, investing in dividend-paying stocks requires patience and a long-term strategy. Now let's figure out how much you need to live off dividends. Diving into the heart of our matter, we're going to talk about numbers, but don't worry, it's not as intimidating as it seems. Remember, the goal here is to replace your current income with dividends. So the first step is to define your annual living expenses. This is the amount you need to cover all your costs, from rent and groceries to Netflix subscriptions and weekend getaways. Once you have that figure in mind, it's time to understand the concept of dividend yield. Dividend yield is the annual dividend payment from a company divided by the price of that company's stock. It's usually expressed as a percentage. For instance, if a company pays out $2 per share annually and the stock price is $40, the dividend yield is 5%. Now, here's where it gets interesting. To calculate the amount you need to invest to live off dividends, you divide your annual expenses by the dividend yield. So, let's say your annual expenses are $50,000 and you're investing in stocks with an average dividend yield of 4%. You divide 50,000 by 4%, or 0.04 when you're doing the math, and you get a result of $1.25 million. That's right, To cover an annual expense of $50,000 with a 4% dividend yield, you'd need an investment of approximately $1.25 million. You may be thinking that's a lot of money. And you're absolutely right. This isn't a get-rich-quick scheme but a long-term financial strategy. With patience, consistency, and smart investing, it's an achievable goal. Of course, this is a simplified example. The actual amount you need could be higher or lower depending on various factors like the specific stocks you choose, market conditions, changes in dividend payouts, and more. Using this formula, you can get a rough estimate of the money you need to live off dividends. And remember, it's not just about the numbers, but also about financial freedom and the ability to live life on your own terms. Living off dividends sounds great, but it's not without risks and challenges. Let's delve into the nuances and complexities that can arise when one decides to live off dividends. First, we need to acknowledge the elephant in the room: market volatility. It's a fact of life in the investment world. Stock prices fluctuate, and consequently, so do the dividends. For those living off dividends, this can mean periods of lean living if the market takes a downturn. Then there's the risk of companies cutting their dividends. Companies are not obligated to pay dividends, and in times of financial stress, they might decide to cut or even eliminate them. This can be a significant blow to those relying on these payments for their livelihood. Inflation is another challenge. The cost of living tends to rise over time, and if your dividends aren't growing at least at the same rate, your purchasing power will diminish. This can be a slow creep that you might not even notice until it's too late and your lifestyle starts to suffer. So, how can you mitigate these risks? The key is diversification and planning. Diversification, the practice of spreading your investments across a variety of sectors and companies, can help protect against the risk of a single company cutting its dividends. It's like the old saying goes, don't put all your eggs in one basket. Planning, on the other hand, involves having a buffer of savings for times when the market is down or dividends are cut. You should also factor inflation into your plans. Consider investing in stocks that not only pay dividends but also have a history of increasing those dividends over time. Remember, living off dividends isn't about getting rich quick. It's about creating a sustainable and reliable income stream that can support you in the long term. It requires patience, strategy, and a certain level of comfort with risk. While living off dividends comes with potential risks, proper planning and diversification can help mitigate these risks. The journey might be challenging, but the reward of financial independence can be well worth the effort. So, living off dividends is possible, but it requires careful planning and a sound investment strategy. To live off dividends, you first need to understand what dividends are. They're essentially a portion of a company's profits distributed to shareholders. As an investor, you become a shareholder by purchasing shares of dividend-paying companies. The dividends you receive can become a source of passive income if managed efficiently. Investing in dividend-paying stocks is an art in itself. It's not as simple as buying the shares of the highest-yielding company. You need to consider factors such as the company's financial health, the sustainability of its dividend payout, and its potential for growth. A diversified portfolio of dividend-paying stocks can provide you with a steady income stream and reduce investment risk. Calculating the amount needed to live off dividends is a crucial step. This depends on your lifestyle, your financial obligations, and your financial goals. To determine this, you need to know your annual living expenses and the average dividend yield of your portfolio. It's an exercise in financial planning that gives you a clear picture of how much you need to invest to generate the desired income. Living off dividends also comes with its fair share of risks and challenges. Market volatility can affect dividend payouts, and companies can cut or even eliminate their dividends if they face financial difficulties. Therefore, it's important to have a contingency plan in place to navigate through such scenarios. In the end, the idea of living off dividends is enticing. It offers the prospect of financial independence and the freedom to pursue your passions. But it's not a get-rich-quick scheme. It requires diligence, patience, and a deep understanding of the investment landscape. Remember, the journey to living off dividends starts with a single step. Start planning your investment strategy today.